Well, hello there. FMCG sector has outperformed Nifty thus far for the last 1 year. We're looking at gains when it comes to the index of 26% as compared to nearly 3 to 4 odd percent. Good earnings along with the growth outlook is expected to increase the demand or the appeal of the sector in the otherwise dull defensive names. But would these companies deliver? Let's answer some of those questions. Hi there, I'm Nickey Mirchandani and I'm being joined by Mangalam Maloo, Assistant Editor at CNBC TV 18. Good morning there.
Good morning. So, the FMCG sector has done extremely well, like you pointed out. But I have to also caveat it with one thing, that it's one stock which has led that index to outperformance. And that one stock is ITC. ITC has a fair weight on the FMCG index. ITC is up around, 58-59% over the last 12 months.
Right.
So that is causing a fair amount of outperformance to the index itself. But if you take ITC off the equation, then you realize that maybe it's at best a market performer or a slight underperformer. But that's pretty much about it.
So if you were to divide between the sub-segment, what is different in this quarter? How is the rural demand stacking up? Some things like the staples, discretionary and paints. How would you rank it?
So, first things first, rural demand's weakness or rural demand weakness in the rural India has, basis what we've heard from all the managements and basis what we can see in the environment, we can assume that the worst of it is behind. It's gradually improving. And that's the worry, that it's only gradually improving and not improving as fast. Yeah. In the places where improvement has been witnessed, it's usually the rich people who, benefit first. So the discretionary consumption is likely to do better. The second thing is that paints are likely to do better because paints usually demand is delayed, not deferred, not denied, right? So those who could not paint their houses during Diwali because of inflation, because they wanted to postpone that, etc., they would have done extremely well. And paint companies too have taken some price cuts. So those are a couple of things that will do well. Staples, which derive a large proportion of their volume, not value, a large proportion of their volume from rural India, they may still face some bit of challenges. Even though demand is gradually improving, it's only gradually improving. And secondly, the worst of price offs isn't over. Prices, inflation levels, etc., come down immediately. But for them to have an impact on consumer behavior, it takes about 3 to 6 months. So you may see some weakness, but the good part is that it is improving.
Yeah, I mean, that's exactly, multiple reports, Mangalam, that I was reading suggested that urban demand is expected to outperform rural demand for the 6th consecutive quarter.
That's correct.
And this scenario isn't really expected to change anytime soon.
True.
From the commentaries that I've been picking up. But let's focus our discussion now on the F&B segment.
F&B,
because Nestle and Tata Consumer Products both get classified within that.
Yep.
How how is the segment performing, and in turn also what are you expecting from Nestle India?
So we'll speak about both Tata Consumer as well as Nestle. For Nestle, the biggest problem is that milk prices are extremely high.
Right.
Over the last 1 year or so, we've seen a big, almost 30 to 40% inflation in milk and milk products.
Right.
So that may impact their margin expansion, or that may impact their cost of materials a lot more than it would impact all the other players.
Right.
For Tata Consumer, on the other hand, they have a couple of things working for them. One, international tea prices have begun to decline, so they may see some volume growth come by out there. And usually in that situation, their margins are also likely to improve the India business. The second part is Nourishco, a business that they acquired from Pepsi entirely over the last couple of years, has been doing extremely well for them. They are expected to do about 150 crores in this quarter in revenue. The third thing that's working for them is the foods business. That's likely to be the growth driver for them. 25-26% growth is what the street is anticipating in their foods vertical this time, and they're entering newer categories as well. The only thing that remains a fly in the ointment for Tata Consumer is the international part, which, the margins have been declining for a very long time. They've been under pressure. They're showing gradual improvement. So that is a trajectory that everyone will keep an eye out on, what happens to their international business margins. As far as Nestle alone is concerned, we're expecting an 11% sort of revenue growth for the company this time around. The EBITDA grows slightly short of the revenue growth, and that means there would be some margin compression to the tune of 50 to 60 basis points. And at the same time, we will see the company's net profit grow in low double digits as well. It's up around 11 to 12 odd percent. The most important things to watch out for Nestle would be one, management commentary on raw material inflation, how demand has panned out. That is extremely crucial. The second thing you'll be watching out for is what happens to Maggi? Because in the low unit packs of Maggi, the 5 rupee packs, they've increased the prices from 5 rupees to 7 rupees, while Yippee has kept its price at 5 rupees as well. So have they lost some market share there or not? And the third thing is the acquisition, or rather taking Purina, the pet care business, inside their fold a couple of quarters ago. How is that scaling up? What's the outlook there? Is something we'll be watching out for.
Alright, if we were just supposed to further narrow it down for our viewers out there and give them exactly 3 key monitorables that like to watch out, apart from the commentary of course, what would they be?
In Nestle?
Yes.
First thing I'll be watching out for, 4,460 crores on the top line. The second thing you'll be watching out for is 23% margins. Anything below that would be a bit of a negative. And the third thing, 675 crores on the bottom line. So these are the 3 things that we'll be watching out for in terms of key numbers coming in from Nestle. Of course, the top line is further segregated into India business and international business. 95 to 96% of their revenues come in from India business. So, that is extremely crucial.
Alright, a quick word coming in for Tata Consumer Products, and also HUL will be reporting in numbers on Thursday. So just a brief insight of what you expect.
For HUL, just watch out for 4 to 5% sort of volume growth. That's what we're working on. Or sorry, 5 to 6% volume growth. That's what we're working with. 150 to about 180 basis points improvement in the gross margins, because from last year to now, we've seen a big correction in palm oil prices, in packaging prices. And again, in HUL, management commentary is more crucial than just the numbers, because numbers tell you about the quarter that is gone. Management commentary tells you about the quarter that's likely to come ahead, and that's more crucial for from an investment standpoint. And when HUL says something, the impact of that can be felt across the consumer space, because they have the highest reach, they have the highest size.
Alright, so that's that. When it comes to the overall sector roundup that we have, commentaries is something that we'll really like to watch out for, to see how the demand has been stacking up for the second half. But with this, it's a wrap. Thank you so much for tuning in.
Thank you.